Hi and welcome to Fresh Thinking by Snowden Optiro. My name's Tarrant Elkington, General Manager for Snowden Optiro. Today I'm joined by Mike Andrew, who is an executive consultant here with us at Snowden Optiro. Mike has over 30 years of experience in geology and mineral resources, in consulting, as well as a number of years at a group resource manager level for a major mining company. So thanks for joining us.
Pleasure to be here, Tarrant.
The topic for our podcast today is around due diligence, and particularly the technical due diligence associated with geology and mineral resources. So just to start, could you tell me, Mike, at a high level, what is technical due diligence for geology and mineral resources?
I think from a point of view when you're looking at acquiring an asset, it's understanding the risk that comes with it, that asset, in terms of the resource and the geology, and how you as a new owner are going to manage that risk or assess it and decide whether or not your company has got the capacity for the level of risk that comes with that resource. And I found that different companies have a different appetite for risk. Some are quite risk averse, others see opportunity in risk. So, when you're doing the work, you need to understand, what your client capacity for risk is, so that you can calibrate, your views on the resource and the asset accordingly. It's no point coming in being risk averse, the sky's going to fall in Chicken Little, for a company that's quite aggressive and quite open to risk. So, that to me is an important, you've got to understand that before you start the review.
Absolutely. I think, like anything, context is the most important thing. Everybody's going to take a different view.
There's simple things like, commodity price. The vendor might have have done all their work at a certain commodity price. The person, the company that's looking at that asset uses a completely different price, very different price, and automatically the value, there's a gap in the value straight up.
Absolutely.
So it's always, so understanding what your client's needs are, or your company's needs are, is probably the starting point. And then it's familiarity with the style, understanding the asset, the geology, and if you're doing due diligence, you should have some experience in that style of mineralization or operation.
Absolutely.
And if you don't have it, you should get someone in who has got that level, has got an understanding.
And I guess that probably leads on to what we would do, technical due diligence, right? So as you go and start out having a look at the geology and mineral resource, what are some of the things you're looking? First want to look at.
Well, first thing is hopefully there's a data room that's got some sort of logic to it, and that all the relevant information. First thing you check is what's available, because sometimes the data room doesn't have what you need, and you need to go back to the vendor or whoever's managing the process to ask for more data. And so, as a minimum, you'd want the drill data that informs the resource, the interpretation, the wireframe, all the interpretive files that help constrain it, relevant technical reports. And they're also not limited just to the geological aspect. You'd want to be looking at metallurgy as well to make sure, that the model is fit for purpose in terms of, being predictive for all the aspects that you're going to, for all the, have all the attributes that you need to understand how that material is going to go through whatever processing options you've got. And also, you'd probably be looking looking for the geotechnical data as well and things like that. Design files, pit shells, underground workings, that sort of thing. Have all that. Very
good. And so once you've got all the data, presumably then you're going to make sure that the numbers are right, or that they line up with what's in the documentation.
Hopefully, you can import it. It's enough. So, first thing, typically import the model, report it to see if you can reproduce the resource reserve numbers.
And once you've got all of that lined up, what are some of the key things that you're looking at when you're doing the due diligence to see?
Well, data quality is one thing. When was all the drilling done? Is it historical? Is there appropriate QA/QC? Have you got confidence in the quality of the data? Is it all data that's been generated recently by one company, or is it a long-lived asset and you've got you might have had 5 or 6 previous owners, various drill campaigns. So it's assessing. Can you use all the data? Do you have to omit some? And that some of that risk is mitigated if it's an operation that's in production, because then you've got, at least you've got you should have reconciliation data. So, import the model, look at the data, reproduce the numbers, look at the data quality, and then work through the interp. Is it just a grade-based interpretation? Does it have geology? Those sorts of things. And then look at the way the model's being, the interpolant. Is it polygonal? Is it inverse distance weighting? Is it creed? Is it a recoverable resource estimate? And just make sure that our parameters and the approach is appropriate to the style and nature of the mineralisation.
And when you let's say you're validating the model, what are some of the things you do in that step?
Well, do the typical things you do in any report. Look at the model, comparative statistics between the informing data and the model. Visual assessment. Are you reproducing? Does the data fit? Swath plots, those conventional. And then I tend to like to do a check estimate, particularly if I think some of the criteria, the interp or the approach mightn't be optimal, just so that you've got, because if one resource estimate is just one, it's one outcome, and there might be many everyone's going to do things a little bit different. If you do a check estimate and you're within 5%, that's estimation error, and it's not a material thing. If you find you probably grab more than 10% out, you'd probably think, okay, why is that? Why are we so different?
So more as a source to dig a bit deeper than it is to be a definitive.
Yeah, because I've done them and got, I've worked on some where I've done a quick and dirty because it was a pretty tight time frame, and I got a very different answer. And when we optimised that outcome, we had a very different view of the potential of that resource.
Okay.
And it led to the project not going well. Our view of the value was much less than the vendors, and so it didn't go ahead. And you get a bit nervous about those things because it is so different. But when you started looking at their production data, it was closer. The grades were coming out closer to our view, the model we'd done, as opposed to the one they were using. Okay. So you're a bit nervous for a while because you think you're making a big call.
Yeah.
And so you've got to, I suppose, justify it to your client or the company, internally, to say, well, I think I'm right, and they're wrong.
And it's always difficult to give that that bad news or the reality, I guess.
And it can go both ways, but most of the time during the process, you find there's not one thing that's material that that sort of jumps out at you and there's this big red flag and says stop. It's more death of a thousand cuts. There'll be you might think, well, the grade's a little bit elevated. You'll probably find you're going to have more tons at a slightly lower grade for similar metal, which, you think, well, you're still producing the same, but then you've got to put more material through the mill. So your throughput, your production rates, and that sort of flows through to your evaluation when you're feeding that back into you're working with the engineers and the metallurgists to understand what the mine plan might look like with our view of the thing rather than the vendor's view. So typically it's lots of small things that add up. And I've worked with clients and managers that have said, I don't want to hear about, they'll set a limit and say, don't tell me anything unless it's more than $50 million. Or, depending on how valuable the asset is. So that, and again, it comes back to that capacity for risk. Because you might be finding stuff and at the end of the day, you might think it's important, but if it's $1 million, it's a rounding error somewhere.
100%. I mean, materiality is everything.
Yeah.
But it's not always on the downside though,
No,
right? So
no.
there are sometimes there can be upside in the geology and resources.
And I find too that if you're working with a company or for a company that's made a decision, we're going to buy this asset, and the response is, well, okay, you found all these things, now tell us how we're going to fix it. And I think there's an advantage with due diligence. As much as I love consulting and consultants, we do tend to be glass half empty on these studies, and we don't look at the opportunities that come with an asset. We're very good at outlining all these issues and risks, but I think as a consult, when you're doing this work, you've got to put the owner's hat on and say, well, how would we fix it? What would we do to mitigate that risk? Or how can we realise the value we think is there?
Yeah.
What would we do to change this operation and overcome these issues?
And one of the I guess one of the aspects of that is considering the exploration potential.
Yeah.
Right?
Yeah.
So,
a lot of assets. People. They're well loved, and over time, everyone starts to, people say, well, it goes. We don't need it really. It's got a resource. It's got a mine life. We don't, we want to go and spend money elsewhere. Like, particularly companies that have got a number of assets, they're always in competition for capital, and they mightn't get the attention, mightn't get the budgets to realise the potential of the resource. So, first thing you can recognise that and say, well, if we did spend a bit of money here, the possibility is there's a good probability that we'll increase the resource base and add value through that. If you look at the history of a lot of operations, they start out with pretty short mine lives, and they're still 30 years later, they're still ticking along with the same reserve.
Yeah.
It's sort of just a hand-to-mouth sort of thing.
Absolutely, I'd love to see a study. I always wanted to see a study of the amount of resource or reserve you had at the time of the feasibility study or the investment decision, and what actually it ends up being. Some often 50 years later or whatever beyond what the feasibility study.
It's interesting, and and when you're looking, other things that I like to look at when you're doing this is, the cutoffs they use. You'll go to some operations and they'll have a bucket to cap. They have a lot of buckets, so there's a mineralized waste that sort of captures everything that's falls out below. Essentially everything's being stockpiled apart from obvious waste. But a lot of the cutoffs and grade bins that are used, you don't see that sort of breakdown in the distribution of the deposit. Like they're not geological cutoffs, they're not natural cutoffs, and so your ability to be able to grade control and mine to those cutoffs, is essentially it comes down to mathematics, your mathematical modelling or grade control models, and so it's important to understand that maybe if you simplify that, it's that sort of classification and misclassification issues. So you might be losing some of the higher grade material to your lower grade bins, or diluting your higher grade with. You may not be as successful as you think you are in being able to dig or mine to those bins, and recognising that and saying, there's an opportunity here to try and be a little bit less selective,
save some costs, or whatever it is in the context.
Again, it comes back to the style and the nature of the mineralisation.
So I guess one other thing I was going to ask is just around the need for a site visit. I mean, how important for in your area? Do you think that's important?
Yeah, I think you've got to go to site, particularly if it's an operating mine.
Yeah.
Go and have a look at it, meet the team, because if you're going to be successful, and acquire the asset, you want to know what the people are like. You want to have you'll want to get to know the resource, the geology, the interpretation. Look at how it's being mined, And the other thing that comes out of a site visit that is the informal data that you don't get in the data room. It's the conversations you have with someone when you're driving around a pit or driving underground looking at something. It's that it's knowledge that never, it's the implicit knowledge that's on site that never gets into a report, or because everyone knows it.
Yeah.
And so only by going to site do you sort of get exposed to that.
And people might be a bit more open, right?
Yeah, yeah. It depends if you've worked with them before. But for some sites, if it's an advanced exploration play, if there's no outcrop, it's still, you still want to go. Maybe getting to site mightn't be as important as getting to see the core if it's all based on drilling. So you'd probably want to spend as much time as you could in the core shed, going through it and understanding the geology, how it's been interpreted. Get some representative sections through the deposit laid out, and spend some time with the exploration team that have drilled it, and to see how consistent, things like logging. If you have a high turnover on site, is the logging consistent? Is what you're seeing in the core being recreated and put into the model, or is all that sort of geological knowledge, at the end of the day, is it just simplified and it's just a grade-based model, even though there's a good geological interpretation there. So it's, you need to get to the site where possible and understand the resource as much as you can.
Yeah, I think that's a good point to close. I mean, I'm not a geologist, but I've been told many times it's all about the geology.
Yeah, got to lick those rocks.
Yeah. All right. Well, thanks very much, Mike.
No worries,
and this draws this podcast to a close. Thanks for joining us and participating in the discussion about due diligence for geology and mineral resources. If you'd like to hear more of our Fresh Thinking by Snowden Optiro, you can find them on our website, Spotify, Apple Podcasts, Google Podcasts, and other podcast platforms. And if you've enjoyed the podcast, please subscribe to our YouTube channel so you can keep up to date with these technical podcasts.